Welcome back to the program. This is Capital Market and we're live on Channels Television. You can weigh in on Twitter at Channels TV and at CTV Template, just in case you've got some contributions on the program. But Mr. Ayodele Akinwumi, head of research at FSDH Merchant Bank, is still here with us on the program, and we'll switch gears now to matters in the market. Being the first edition of Capital Market in March, let's review the market status in February. What would you say happened in the equity market? Let's start with the equity market, because of course we've got the bond and T-bills segments of the market too. It opened at 25,000 and some fractions, and now we have it still hovering around that 25,000, but I think it's gearing towards 26,000 now. Give us a sense of what actually transpired in February.
Okay, so most of the market indicators in the month of February dropped compared with what we had in the month of January. So you have the oil share index dropped marginally, but however, the rate of drop in February was lower than the rate of drop in January, so which is positive. Also, the market capitalization dropped, the deals value and volume, everything dropped. A couple of results were released that month, which were not very very good also, even though, yes, some of them, particularly United Capital, was quite very good in terms of gross earnings, PBT, and even the dividend they declared. But then most of other companies that released the result in the month of February reflected the challenges in the broader economy.
So now we're in the month of March. What are we likely to see? We've seen Dangote Cement, we've seen Nestle, and a couple of other earnings will be coming in the week that we'll be clipping now. What are your thoughts in terms of outlook?
For me, I think we may likely see the repeat of what the result, the trend we saw in the month of February. Again, except for some isolated performances. You discussed earlier about the GDP number that was released in this week, a contraction, the first time for a long time.
25
yeah, even though we were expecting that. Now, the result that companies that are going to release will not be different from that. We expect it to be lower than what we had last year, both in top line and bottom line in rate terms. But again, what investors should be looking at is the outlook going forward. It appears that the outlook going forward seems positive, given what is happening in oil price, oil production, and the plans that the federal government is putting in place to ensure that they stimulate the economy.
So let's go to the T-bills market. There was a circular from the Debt Management Office this week reviewing the minimum amount required for participation in the T-bills primary market auction from 10,000 to 50,001 naira. Help us to understand what this means, because a lot of people are pessimistic on it, thinking that it is going to potentially slow down activities in the treasury bills market. Is that correct? Okay,
I think what the revision is actually to 50 million and 1,000 naira. So what the Debt Management Office has done is what I can call market segmentation. So you create like a wholesale market and create a retail market. A retail market that will enable the introduction of federal government savings bond into the market this month. And I think they say it's going to come, the first auction will take place next on 13th of this month, which for me is very fundamental, which for me is very creative, and is going to deepen the market. Now you have the fund managers who will continue to invest in the treasury bill, who will continue to invest in bonds, who have 50 million and 1,000 to do that. Then we now have a whole lot of retail investors who never understood and who never had the capacity to invest in federal government bond before now, and they now have opportunity to invest in federal government savings bond. One of the things that I think this will create actually, at the moment now, you mentioned it earlier, the yield on the treasury bill is about 22%, the yield. This is not sustainable for Nigerian economy. This is not sustainable for the private sector. It's crowding out the private sector from this market. Now, for me, if federal government is able to capture, say, 50 million Nigerians who will be investing 5,000 naira every month into this, they will be able to broaden the number of people who are investing in federal government bond. And another characteristic of this is the fact that they will be paying coupon quarterly, which is very good. And then this bond will also be listed on the Nigerian Stock Exchange so that it enhances the liquidity of it. So if you do have money before the maturity, you can trade it.
On the secondary market.
Yes. So what this will do actually with time, and it will mean that the rates in the market may likely drop, because if federal government is able to create a base to encourage retail investors to invest in this, and they don't have to wait for 3 years or 2 years for maturity to sell that instrument if they so desire, what it will happen is that there will be a lot of interest. Fund managers also will be able to create products to take advantage of this. And the government has been advertising, including on channels, TVs, on the importance and that this bond, this instrument we create for them in the market. Government will be able to have access to long-term funds from diverse people who are less rate sensitive than the PFAs and large asset managers now, who are always demanding for high return. So once that happens, private sector will be able to raise money. Investors in this bond who keep their money in savings account in the bank will have alternative instrument to invest to any higher return.
So much of diversification.
Yes, and ultimately the Nigerian economy will benefit from this program. I think it's very good that is coming from the Debt Management Office at this particular time.
So we'll be seeing the FGN savings bond coming on board soon. How are you guys bracing up for this?
We are very excited about it. I mean, this week we sent out 2 notice to all our clients and our subscribers to our mailing list to inform them about this, and daily we send it out. We've been getting a lot of interest from them about it, and they're just waiting for this instrument to open in the market on 13th of this month for them to take advantage of. I think it's very positive for the market, and a lot of product will be created around that by fund managers and asset managers to take advantage of this, and of course it will lead to financial inclusion in the market. The
problem with these bonds is the fact that some of the traders limit themselves to equities alone. Not so much of bonds is known to these, and that means awareness creation about the savings bond will be on the low side.
I do not think so. Like I told you, in FXTH this week we sent out 2 notices between last week and now. And I've seen a lot of report from other people sensitizing the investing public about this. Debt Management Office is doing a great job in sensitizing the investing public about this.
The regulators are trying, yes, we know. But when it comes to the operators, I think there's a challenge in there. Anyways, let's switch gears again to inflation, which FSDH Group has projected is going to drop again. What did you base this on?
Okay, so we released an inflation number this week. That is, our forecast is going to drop to 16.95 this month from the number in January. And now, of course, we said it's
all the way from 18.7.
Yes, please. And basically on a kind of base effect. And people will say, "Oh, guys, what has happened? Price of things are still going up." And we alluded to that in that report. Prices of consumer goods between January and February went up. But the inflation numbers that the NBS usually publishes is the change in the consumer price index between a particular month and the corresponding period last year. Okay, so
it's all about base effect.
Yes, the rate of increase in February last year was quite sharp and higher than the rate of increase this year. So it's going to bring the inflation number down.
All right, Mr. Ayodele Akinwumi, head of research at FSDH Merchant Bank. Thank you very much. It's always a pleasure to have you on the program. Unfortunately, we don't have enough time to talk more about this, but it will be good to have you again. With that, it's a wrap. I'm Temple Ashajo, and I'll see you next time.